Hey, how are you doing today? Today's topic is a risk-free investment that requires a little of business knowledge and skills that are not taught in school. Thanks to me, Smari Kenya, you won't pay a dime to get this information. Okay, so let's jump into it. Government bonds and treasury bills. By the end of this video, you should be able to decide on which one to invest in or both. Treasury bills are a secure short-term investment offering you returns after a relatively short commitment of funds. The rates in Kenya of these treasury bills are attractive. I bet you can already feel the magnetic attraction to try these out. They are auctioned each week and are sold at a discount, meaning that investors, which is you, choose the amount that they will receive when and the bills mature. If you have a bank account in any of the local commercial banks like KCB, ABSA, CDN, Family and I&M Bank, then you can invest directly through the central bank and avoid additional fees. Let me digress a bit. You don't have to always be on the losing side of paying taxes. High interest rate loans, electricity and water bills, and enormous rent for small, ill-designed houses. This is your chance to be on the winning side now. Become the shark and stop being the fish to always being fed on. So, to invest in treasury bills through the central bank, particularly in Kenya, though it might be the same for most countries, follow these steps. 1. Open a CDS account. It is free to open this account, and the essence of you having one is to help the central bank identify you as a holder of treasury bills in this case. To open this account, you only need to hold a bank account with a Kenyan commercial bank, then submit a copy of your national identity card, passport, or alien certificate. 2. Decide how you want to invest. Treasury bills are offered every week with maturities of 91 days, 182 days, and 364 days. So, you have to choose one of these three options. Decide on the maturity length based on the recent interest rates that you can be able to deduce what to expect through the next auction. 3. Complete and submit an application form. Information included in the form you need to fill in the treasury bill you want to purchase and the issue number, the maturity period you want, the face value amount you want to receive upon maturity, your names, telephone number, CDS account number, and whether your funds are from a local or offshore source. 4. Get the auction results. The results of the auction are published through Treasury Mobile Direct, abbreviated as TMD, and in the statistics section in the Central Bank of Kenya website. 5. Payment. The payment period for the auction closes on the following Monday at 2 p.m. 6. Maturity proceeds. At the end of either the 91, 182, or 364 period, the face value amount will be transferred to the commercial bank account indicated on the CDS account. That was all about treasury bills. Now let's look at government or treasury bonds. Don't confuse the two. Treasury bonds benefit both you and the government. Wondering how? Let me break it down for you. Through treasury bonds, the government raises significant capital to support itself in initiatives such as infrastructure development. The CBK auctions treasury bonds on a monthly basis, unlike treasury bills, which it auctions on a weekly basis. It may offer some bonds throughout the year at times. The bonds are listed on the Nairobi Security Exchange for secondary trading. So to invest in these government bonds, you need to follow all the steps we outlined for treasury bills, like opening a CDS account, among others. These bonds, just like the bills, are risk-free investment and provide consistent source of income within a specified period of time. A 1-year government bond in Kenya would have a 14.860% yield currently, which is expected to rise. I assure you that this kind of investment is the best you can ever come across, leave alone even land investment. Why don't you go sit down by yourself, think about what I've just said, then decide on when you'll make a step and start this. I've clearly outlined the difference between treasury bonds and treasury bills. Now it's up to you to decide which one suits you best. I hope you've gathered all the information I've given you. If not, just rewatch the video, pausing and taking down the important points. The only thing I can add on this is for you to be patient and vigilant when investing in this, since it is secure but not so fast. So be wise when deciding on the maturity periods. It was nice presenting all this to you. As we come to the end of this video, please like, share, comment and hit the subscription button below. Bye bye.